morning. It's 5 a.m. in New York. I'm Matt Miller in for Danny Berger with your Bloomberg Brief. UK markets are closed for a bank holiday. Here's what you need to know. Stocks pull back after a rally fueled by Fed Chair Powell's rate cut signal. Investors now shift to focus on Nvidia's earnings set for later this week. And Keurig Dr Pepper agrees to buy coffee and tea maker JDE Peet for $18 billion. Let's take a look at what the markets look like this morning here. Futures, as I said, pulling back down a little bit, 0.2% on the S&P 500, 0.25% on the NASDAQ. We had, of course, big gains, more than 1% gains in the cash trade for the major indexes, the big major indexes on Friday after Powell's speech at Jackson Hole. The Russell was up 3.9%. And you can see the Russell still showing a slight gain in terms of futures. Take a look at treasuries. Also, obviously, a lot of buying in that space on Friday with the expectations that the Fed will cut rates. You have the two-year bond future still down right now, or turning around, I should say, back down. These are the prices, not the yields. The same is true with 10-year and 30-year bond futures after the big gains that we saw in the cash trade on Friday. For some of the stocks to watch, let's go over to London. Kriti Gupta joins us with a rundown. Kriti?
Matt, we'll start off with Intel here. Massive moves this morning, down higher by about 3%, trading at about $25 a share. This comes after a 10% stake is officially confirmed by the company. The U.S. government is officially holding on to Intel to that tune, about $8.9 billion, using CHIPS grant money to take on that stake. Now confirmed by both the White House and Intel. Those shares higher by about 3% in the pre-market. Let's go to the M&A story of the day, though, in Europe, but also in the States. You mentioned it in your headlines. That is JDE Peet getting a bid, an $18 billion deal from Keurig Dr Pepper. Those shares soaring here in Europe, higher by about 17%. This is enormous because not only are they buying JDE Peets, they're also restructuring their company to keep their coffee and their soda operations separate, which is something that they put together back in 2018. The last one I want to keep an eye on is Ørsted. This is a European company, a Danish company that's been under quite a bit of pressure in the last week or so, but really getting hit hard this time because of a policy decision from Washington. Donald Trump putting a halt to a wind project in Rhode Island that is 80% completion. Just another hit to the renewable story. Ørsted shares down about 16%, Matt.
All right, Kriti, thanks very much. Kriti Gupta there with a look at your stocks in London. This hour, we're going to speak with Sonja Marten, DZ Bank, and Michael Skordeles of Truist about what's going on in these markets. I'll take a look right now at stock futures again, retreating after Chair Powell's rate cut signal on Friday pushed the S&P 500 to its third straight weekly gain. That even after 4 days of the week traded down. Allianz Chief Economic Advisor Mohamed El-Erian spoke to CBS after Powell's address at Jackson Hole.
The Fed is looking at slightly higher inflation and a weakening labor market. And what Powell finally did, and many of us feel he should have done this earlier, is he said the risk to the employment side is higher than the risk to the inflation side, and therefore an interest rate cut is warranted. As you know, many of us felt he should have cut last month.
Bloomberg MLive cross-asset strategist Ven Ram joins us now. And Ven, I was wondering, all week, as was everybody else, where Jay Powell would go, considering the fact that we had a very weak set of jobs revisions, and then we had much stronger inflation data than had been anticipated. I guess now we know, but there's a lot of data to come still before the September 17th meeting, isn't there?
Yeah, morning, Matt. That's absolutely true. I think that, what we got from Powell was a pivot that the markets were not really quite expecting. As you said, people were expecting them to be a bit hawkish going into the Jackson Hole meeting. But, what Powell said was that, look, the Fed is now kind of changing its stance a bit to go from being solely minded about inflation to be about equally minded between inflation and unemployment. And the weak July jobs report set up the pivot for the markets. And I think that if we get another weak print with the NFP early next month, I think that will cement the rate cut expectations. Mind you, Matt, I mean, But all that Powell is saying is that, is consistent with the 2-day rate cuts that the Fed had indicated with its June dot plot. And that is what is signaled. So I think that the Fed is on course to deliver 2 rate cuts. But what will be very interesting is what happens in 2026. The markets are thinking that we'll get 80 basis points of rate cuts. But, it is likely that the next Fed chair is someone who's going to be very dovish. And that sets up the market for a very interesting 2026.
Do we have to worry about inflation, then? Because I thought the Fed wanted to be averaging 2%. That's why we let inflation run hot in the post-pandemic era, because it had been so low previously. But we've spent now so much time far above 2%. In order to average 2, we'd really have to get to 0 for years, right? And that's obviously not going to happen.
That's absolutely not happening. In fact, the last core PCE print that we got below 2% was in 2021. More than 4 years ago. So I don't think we are going back to the 2% inflation world anytime soon, Matt. You're absolutely right there. But what Powell is suggesting here is that, when the economy starts caving, i.e., the labor market turns soft, the Fed is going to overemphasize the dual aspect, the employment aspect of its mandate rather than the inflation aspect. Because if the economy starts shedding jobs, that means that inflation will come down eventually. Whether or not that will happen, we don't know yet because of the tariff concerns. But that's what the Fed is thinking. And that's how investors should be thinking about positioning in the Treasury curve as well.
Ben, great to get some time with you. Ben Rahm there of Bloomberg's MLive team. You can find his work and the work of the team by typing MLIV Go on your Bloomberg terminal. Joining us now is Sonja Marten, Chief FX Strategist at DZ Bank. And Sonja, I first want to get your take on Jackson Hole, an event we were waiting for, it seemed, for so long. How did you finally see it?
Well, I thought it was incredibly interesting because, just a few days before the meeting, before the speech by Jerome Powell, markets had started to speculate that he might be somewhat more hawkish. I'm not quite sure, to be honest, where those rumors came from, but had built some expectation that he might not be that dovish and that had supported the dollar, and we'd seen some pricing out of rate cuts. And then I would say he actually delivered what had previously been expected, and that was then interpreted as being very dovish. So it's just interesting how the market interprets these things. What he said supports the case fully that the Fed will cut rates, a couple more times this year, and then again further next year. And I think 5 rate cuts is what the market is pricing in for the next 12 months, and that's what we think is likely. So to be honest, he was on message. I just think the market was taken by surprise because of those previous speculations about him being a bit more hawkish.
So if we get rate cuts, I mean, we've seen the dollar off, Sonja, about 10, 11% from its highs in 2022. Although over the last few weeks, we've seen a little bit of dollar strength, judging by the BBDXY. Do we get to resume then the downward move in the dollar if the Fed is in rate cut mode?
Well, I mean, you've seen the reaction to Jackson Hole. The dollar has lost some ground. We're back around 117. So the sort of readjustment of rate cut expectation has now been priced in. So to that extent, I would say, a lot of the news has been digested already. I think the dollar in general, I mean, it's very easy to be bearish on the dollar with everything that's happening in the U.S. And certainly, Trump's spat with the Fed ranks high on the list of many uncertainties the dollar faces. I think it's a bit more difficult to be bullish on the euro. I mean, it's one thing to be bearish dollar, but the question for euro dollar is not just that one side of that equation. We have to look at Europe as well. And I think while the numbers this morning were a bit better than expected, the overall tenor right now, tone here is rather soft on growth. There's expectations for 2026, but these have yet to materialize. So, we have a 120 forecast for euro dollar, which is moderate from current levels, but I think a lot of the news has already been priced in, and there isn't that much positive surprise potential, I think, from the Eurozone right now.
On the euro side, what kind of growth are you expecting? I mean, the Germans are finally going to go into deficit spending in a real way and hopefully make some structural reforms as well. Does that bode well for the economy, or are they in too much of a tough spot to begin with?
No, I think it's going to have a positive impact as we look into 2026. I mean, we're not talking massive growth, but we're definitely talking about a resumption of a positive growth dynamic. But I think the really crucial part here is going to be that the government manages to put this money to good use. So they have a huge fiscal budget that they can now spend. And of course, the important thing will be that they spend it on things that are actually growth relevant. And that's going to be the big challenge for the government, which, as you know, has small majorities, so things are very difficult politically for the chancellor. So that's going to be the big question. And I think coming back to the euro, when you think about how much the euro benefited from hopes for more growth next year, we really will need to see now that the government can manage this challenge and can put this money to good use. And so I think a lot of positive news there has already sort of been front loaded, if you will. So I think, we'll have to see how that plays out, but it's a challenge for the government, certainly.
What are the other pairs that you find most interesting? I mean, I know the yen is one, and the Japanese central bank, the Bank of Japan, is one that even our own Treasury Secretary is giving advice to. How do you see that pair?
Yeah, I'm sure that was well received. So I think the yen is one of the more interesting currencies. I mean, we have seen this massive shift in monetary policy from the Bank of Japan, and that's going to continue to unfold. I mean, the BOJ has more room to hike interest rates, and I think that's going to make Japan, or the Japanese yen, one of the currencies to watch into the next year. So we're definitely bullish on that. We have a dollar-yen forecast of 135, so we see quite a significant upside potential for the yen in the year to come.
And are there any others that you find, any other pairs that you find more interesting lately, Sonja? I mean, the Swiss franc has been interesting to watch. What about the commodities currencies?
Well, actually, I think the one currency that I was looking at this morning is sterling, because it's just so confusing, that currency pair. When you look at cable, I mean, we had such a good performance from sterling this year on the back of hopes for, solid economic growth. There was a trade deal between the UK and the US, and that sort of gave rise to some optimism, the pricing out of rate cuts for the Bank of England. But then at the same time, you have this concern about how the economy is going to develop looking forward. There's definitely some fiscal policy concerns, and the political situation isn't ideal either. So I think that's an interesting currency pair to watch, simply because there are so many unknowns in that equation. But generally speaking, I think what the real deciding factor for most currency pairs is obviously which side of that trade dispute with Trump are you coming out on? And those currencies that can manage to avoid, or those countries that can avoid higher tariffs, are definitely going into that with a plus.
Although there aren't many in the UK, are there? I mean, I often even forget about the economy. It's had so many problems for so long, it's almost not worth talking about.
You said that, I didn't.
All right, Sonja, great to spend some time with you this morning. Really appreciate it. Sonja Marten of DZ Bank. Let's get to some of the other top stories trending on the terminal this morning. Thoma Bravo is said to be close to a deal to buy call center software maker Verint Systems. According to sources, that deal would value Verint at about $2 billion, including debt. An agreement could be announced as soon as today. A representative for Thoma Bravo declined to comment, while Verint didn't immediately respond to a request. BlackRock paused fundraising earlier this year for its latest Asian private credit strategy. According to sources, fundraising came to a standstill after BlackRock announced it was buying private credit firm HPS. The pause adds to uncertainties for BlackRock's private credit ambitions in the region. And UniCredit has expanded its equity stake in Commerzbank to about 26%, making it Commerzbank's biggest investor. The Milan-based bank UniCredit has been hoping to acquire its German rival. The German government, of course, opposes a takeover. Coming up, Keurig Dr Pepper gives its coffee business a boost. Details of an $18 billion deal to buy JDE Peet. Next, this is Bloomberg Brief. This is Bloomberg Brief. I'm Matt Miller in New York. Keurig Dr Pepper buys Dutch coffee maker JDE Peet for over $18 billion. The deal is part of a bigger overhaul to split its coffee business from other beverage operations. Keurig Dr Pepper's CEO sees the acquisition as an opportunity to, quote, create a global coffee giant. Joining us now from Amsterdam is Bloomberg's reporter Charlotte Hughes Morgan. Charlotte, it's a fascinating story, and I imagine JDE Peet's must be almost a national champion considering how important coffee is to the Dutch economy.
That's right. Thank you, Matt. Yeah, this really is a transformational deal for Keurig Dr Pepper and, of course, for JDE Peet's as well. As you mentioned, so Keurig Dr Pepper put an offer in for JDE Peet's, values it at 15.7 billion euros, roughly 18 billion. So it's a big deal. But what is really interesting about it, as you mentioned, is that following the acquisition, Keurig Dr Pepper have said they plan to split their operations into two standalone companies, both listed in the US. One will be a global coffee company with annual net revenues of around $16 billion. And the other will be a soft drinks company focused on Keurig Dr Pepper's kind of key brands, are really popular, Dr Pepper, Ghost, 7-Up. So what we have is this absolute kind of split of the company into two kind of laser-focused entities. The deal is expected to close in the first half of 2026. Current Keurig Dr Pepper CEO Tim Cofer will head up the soft drinks business, and the CFO will take over the global coffee company.
So it begs the question, what other businesses out there are for sale in coffee or soft drinks, or what other businesses out there are desirable in coffee and or soft drinks? Does anybody have his or her eye on the next target, Charlotte?
Yeah, well, of course, it's hard to say. I think we've seen this kind of consolidation in the soft drinks and beverages industry, in response to shifting consumer trends, but also in response to a number of kind of challenges that companies are facing, right? If you look at this deal, for example, the rationale for splitting off the coffee business from the soft drinks business is that actually coffee companies globally have been kind of facing a number of challenges. You've had record green coffee inflation that's kind of sending up the price of beans. You've got tariffs, which are kind of making it harder for companies to import the coffee beans at reasonable prices into the US. And you've also got competition in the industry. The coffee market in particular is a very fragmented industry. Meanwhile, the soft drinks demand continues to grow. Keurig Dr Pepper was really seeing kind of growth in that part of the business. So that's the kind of rationale for splitting. But yeah, of course, I mean, I'm sure there are plenty of companies that have got their eye on potential targets as they kind of respond to these changing consumer dynamics. And
coffee prices have soared recently. I mean, there was a bit of a dip in 2025, but they've really bounced back. So that's a commodity that remains fairly expensive.
Yeah, definitely. I mean, it's all to do with the climate, really. So the biggest producers of coffee are Brazil by a country mile, and then also you've got Vietnam and other countries globally. But Brazil in particular, you've had droughts, you've had kind of, I think last year was kind of record number of fires, so really damaging the crop, and that obviously has sent the price of beans through the roof. And the kind of knock-on effects on coffee companies has been, obviously, the margins have been squeezed. They've had to try and pass on those, the price increases in the commodity onto their customers. And JDE Peet's, for example, is a case in point. They have been through some really tough negotiations with European retailers that have kind of, weighed on their results. JDE Peet's, had this incredible IPO in 2020, but since then has kind of struggled to maintain some of that share price momentum. I mean, this deal from Keurig Dr Pepper is for 31 euros 85 cents per share. That's only slightly higher than the original IPO price. So you can see that the knock-on effects of this kind of huge commodity price increase has been felt in these companies. But it will be interesting to watch what happens, with this new global coffee company. Will consolidate the kind of JDE Peet's market share in the US. They already have the Peet stores. So it'll be interesting to kind of see what the addition of that global geographical JDE Peet's portfolio does for the Keurig brand as well.
All right, really interesting stuff, Charlotte. Thanks so much for joining us. Bloomberg's Charlotte Hughes Morgan covers the industry for us out of Amsterdam. This is Bloomberg. Time now for your front page news. First up on the Washington Post. National Guard members in Washington are now carrying weapons, according to a statement from the National Guard. Its members will carry service-issued weapons, which include M4 carbine rifles and M17 pistols. More than 2,200 National Guard members are in Washington, D.C., including troops from 6 other states since August 11th. Next up on the New York Times, President Trump is threatening to investigate former New Jersey Governor Chris Christie over so-called Bridgegate. Trump says Christie lied about 2013 lane closures on the George Washington Bridge in order to stay out of prison. Christie was a one-time Trump ally, but recently criticized the president over his use of the Justice Department. And on the FT, investors are piling back into the New York office market. Owners of 4 New York skyscrapers have tapped the commercial mortgage-backed securities market to refinance their debts in recent weeks, raising $3 billion. That has lifted borrowing tied exclusively to New York offices in the CMBS market to $11 billion this year. This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Danny Berger with your Bloomberg Brief. UK markets are closed today for a bank holiday. So here's what you need to know. Stocks pull back after a big rally fueled by Fed Chair Powell's rate cut signals. Investors now shift focus to Nvidia's earnings set for later this week. And Keurig Dr Pepper agrees to buy coffee and tea maker JDE Peet for $18 billion. Here you see futures are down across the board. S&P futures and NASDAQ futures falling a quarter to a third of 1%. Russell futures little changed after on the Russell a 3.9% gain on Friday. The S&P was up more than 1.5%. Take a look at what's going on with Treasury futures. We obviously had a big Treasury rally on Friday. Now we see futures down just a bit across the curve. But we saw, as I said, a big rally on Friday with the U.S. 10-year yielding 4.25. For some of the stocks to watch, let's get over to London. Keurig Gupta joins us with a look. Keurig?
Matt, Intel very much in focus this morning, higher by about 3%. The stock soaring after confirmation from both the company and the White House that it is official. The U.S. government has a 10% stake in the U.S.'s biggest domestic manufacturer of chips, a tune about $8.9 billion deal, really funded by CHIPS grant money, something that's being well received by the markets this morning, trading just shy of $26 a share. But it is very much an M&A Monday kind of day as well. You mentioned it earlier, JDE Peet's very much in focus as it's getting a bid from Keurig Dr Pepper, an $18 billion deal that is moving the shares to the tune of 17% this morning. This is a really big deal. It's also a little bit of a shakeup for Keurig Dr Pepper, because not only are they looking to buy this company, they're looking to shake up their operations, separating their soda business from their coffee business as well. So looking forward to seeing how that's received in the market. Keurig Dr Pepper shares, on the other hand, down about 3% in the U.S. pre-market. Ørsted is the final one we've got our eye on. It is the big story of the morning here in Europe, but really a reflection of a U.S. policy decision. Ørsted shares are down by about the same margin that JDE Peet's was up, about 16% lower on the days. Comes after a Rhode Island wind project was terminated by Donald Trump, a project that had a lot of investment from Ørsted and hit completion to the tune of about 80%. So that policy hiccup really weighing on those shares this morning, Matt.
All right, Kriti, thanks very much. Kriti Gupta there with a look at some of your individual stock movers. Let's get down to, or back to, I should say, post-Powell market stocks pulling back a bit after the Fed chair's remarks on Friday. But those remarks pushed the S&P to its third consecutive week of gains, even with 4 out of 5 trading days in the red. Bloomberg MLive cross-asset strategist Ben Rahm is back with us for more. So, Ben, what did we get specifically in terms of dovish signal from Chair Powell?
Well, I think that, he pointed, for a long while now, since the Liberation Day tariffs, he's been harping about the inflationary impact of those tariffs, and it was kind of different when he took the podium on Friday, where he emphasized the balance of risks meaning the Fed is more minded now about the employment side of its mandate, meaning that if the employment rate goes higher, unemployment rate goes higher, the Fed is going to be more minded to cut rates to accommodate that economy, even if they're going to sacrifice their inflation vigilance for the time being, because the thinking being that if the economy cools, then the inflation, which is a lagging variable, will follow with a lag.
Has anybody drawn parallels to Arthur Burns here, Ven? Because it seems like, at least looking at the last CPI, core CPI at 3.1%, core PPI at 3.7%, and headed in the wrong direction, cutting rates at this point could continue to drive inflation higher.
Absolutely, I think, and no one is more minded about leaving a legacy that is going to, he doesn't want to replicate Arthur Burns' legacy, Powell. So I think that he's very acutely aware of that. But I think what he's promising here is the 2 rate cuts that they had already penciled in June. And, why is he suddenly disavowing his Arthur Burns non-Arthur Burns credentials? Because, if you look at the average core PCE for this year, Matt, it's about 275. So that means that the Fed has got some room here to cut rates, and that is what he is emphasizing. And I don't think that, if inflation continues to accelerate and if the labor market holds its poise, I don't think the Fed is going to go Fed is going to go cut rates much more than 2 rate cuts at this point of time.
All right, Ven, thanks very much. Ven Ram there of the Bloomberg MLive team. You can find their work by typing MLIV on the Bloomberg terminal. Joining us now is Michael Skordeles, head of U.S. economics at Truist. And Michael, what do you think the risk is of inflation accelerating from here? Because the effects of the tariffs are starting to hit now, but they're expected to continue in the 3rd and 4th quarters of this year.
Yeah, first, thanks for having me, Matt. Look, you got to look at it in the big picture and zoom out and not just look at the 1 month-to-month number, whether it's CPI or PPI or the upcoming PCE. But when you zoom out a little bit, you do start to see some of those signs of acceleration in the inflation data, and especially those things that are largely imported, things like tomatoes. 90% of the tomato crop is coming from Canada, or coming from Mexico, and increasing tariffs has kicked in here in the middle of the summer, and we're seeing those prices increase. Additionally, these last couple numbers, but especially the July number for CPI, you saw services reaccelerate. So those aren't good signs, and that really puts the Fed in a sort of rock in the hard place sort of situation. So
it does look like, though, Powell is leaning toward cuts. I realize there's a lot of data between now and the next Fed meeting, which I believe is September 17th. How do you see this playing out, Michael?
So I'd say the first thing is that, we've seen the opportunity, the window of opportunity for them to cut has opened, and that's less about the pressure from the White House and really just where the data is coming from. So things have cooled down, especially on the labor market. And again, that's one side of the mandate for the Fed. And so that, weakness that's happened, especially as people were sitting on their hands, companies sitting on their hands in this kind of no hire, no fire mode that's happened over the summer, that's opening that window of opportunity. That said, I think markets got a little ahead of themselves, especially on Friday, on this notion that, it's 100% chance of a Fed rate cut in September, and then they're going to follow that up with several more right behind that. We think that the Fed's going to continue to be a little bit more gradual and a little bit more, as I said, long-term perspective, because they know that once that inflation genie is out of the bottle, it gets really hard for them to put it back in, and it literally takes years. And that's not about Arthur Burns. That's about the long-term track record of what happens with inflation and inflation expectations going forward.
How do you view the labor market right now, Michael? Because the downward revisions were really bad. It looks like we're adding something like 35,000 jobs a month over the past few months. But I guess with a reduced supply, labor supply, we don't necessarily need to keep adding 100,000 jobs a month.
That's correct. And so the way we see it is that whatever you want to call it, equilibrium level of what it takes for job growth on a monthly basis to maintain the level of the unemployment rate has definitely gone down. Naturally, it's, plus 100,000, maybe closer to 125,000. Clearly, it's ratcheted down, and it's, maybe it's 75 to 100,000. It's in that range, but it's clearly lower. Additionally, this notion of the no fire, we're not seeing a material bump up in the weekly jobless claims. Continuing claims have started to bump up a little bit, but there's some seasonal fluctuations that happen there as well. But overall, long term, again, zooming out, we're just not seeing companies letting people go, which, when you think about it, really makes sense, because if companies are continuing to look through the tariffs and they see this on again, off again policy, they say, we've seen this story before. We saw this certainly during the pandemic. We're not going to let people go so that 6 months later we can hire them back at a higher rate and have a struggle as to getting those workers back quickly. So they don't want to get caught, offsides. They want to make sure that they have the labor that they need. So they're taking a bit of a margin hit on that side and maintaining or hanging on to employees, which is really what's happened the last couple of years. So we're continuing to see that as we talk to different companies. How does economic growth look to you, Michael? Because earnings growth, for at least for S&P companies, has been extraordinary. I mean, really, double-digit earnings growth for the 474 companies that have reported so far. We have yet to get one of the biggest hitters, NVIDIA, and you continue to see CapEx, at least from these hyperscalers, climb to higher and higher highs. Yeah, so a couple of things. A is the economy is not the market, and it's certainly not earnings, and they're not on the same timeline. So they're not synced up exactly. But rightly, as you point out, companies like NVIDIA and the investment that they're making, and it's real investment and it's cash investment. I think that's a key differentiator compared to all these comparisons we've heard from competitors and others and clients asking us as well. Like, isn't this the tech bubble all over again? The difference is these are cash buyers. This is not on the come the way it was in 2000. And it's real earnings that are coming through for these companies, especially like the NVIDIAs of the world. That said, economically, it's very sluggish, and it really depends. Kind of where you sit is where you stand, is the old saying. But what's going on in the economy really is a sector by sector, industry by industry sort of discussion, even within certain major industry groups. So think of energy. You just talked about at the bottom of the hour with the news headlines about solar and other projects being delayed. Well, that's not positive for energy, and it's certainly not positive for things like CapEx. On the other hand, within the oil and gas sort of side of the energy, things are going well, and there's opportunities for them, especially for natural gas providers, to be able to export under some of the regulations and other things that have been loosened in recent years and seem to be encouraged by the current administration. All right, Michael, great to get some time with you. Really appreciate you joining us early this morning. Michael Skordeles there of Truist talking to us about the economy and the post-Jackson Hole era. Let's get to the other top stories trending on the Bloomberg terminal this morning. Thoma Bravo is said to be close to a deal to buy a call center software maker, Verint Systems. According to sources, the deal would value Verint at about $2 billion, including debt. An agreement could be announced as soon as today. A representative for Thoma Bravo declined to comment, while Verint didn't immediately respond to a request either. BlackRock paused funding earlier this year for its latest Asian private credit strategy. According to sources, fundraising came to a standstill after BlackRock announced it was buying private credit firm HPS. The pause adds to uncertainties for BlackRock's private credit ambitions in the region. And UniCredit has expanded its equity stake in Commerzbank to about 26%, making it Commerzbank's biggest
investor, Milan-based UniCredit, has been hoping to acquire its German rival, but the German government opposes a takeover. Coming up, Keurig Dr Pepper making an $18 billion acquisition as it revamps its business model. We'll take a look at the deal next. This is Bloomberg Brief. This is Bloomberg Brief. I'm Matt Miller in New York. It is M&A Monday with Keurig Dr Pepper continuing its overhaul. The owner of Snapple is set to buy Dutch coffee maker JDE Peet for over $18 billion. Keurig will also then split the coffee business from its soda business and create two independent companies. The CEO says, quote, "We are seizing an exceptional opportunity to create a global coffee giant." Joining us now from Amsterdam is Bloomberg's Charlotte Hughes Morgan. So, Charlotte, first off, on the acquisition, it's a big number, more than $18 billion. What kind of premium is this?
Yeah, that's right. This is definitely a big deal for Keurig Dr Pepper. So it's about a 20% premium from JDE Peet's closing price as of Friday. And we did see JDE Peet's share price kind of spike, I think, to just under the offer price in early Amsterdam trading today. So as you said, this is a big deal. This is a potentially transformational deal for Keurig Dr Pepper. 15.7 billion euros for JDE Peet's. That's, I think, about $18.4 billion. But what's really interesting, as you mentioned, is this intention to split Keurig Dr Pepper into two separate companies. On the one hand, you've got this global coffee giant that will be listed in the US, which will have annual net revenues of about $16 billion estimated. And then on the other hand, you've got the soft drinks side of the business. So Dr Pepper, 7-Up, Ghost, those kind of winning soft drinks brands will be spun off separately and again listed in the US. So the rationale behind this is clearly to kind of have a more laser focus on those kind of separate parts of the beverage industry. You've got, on the one hand, the soft drinks, which have been growing well. That's really been kind of driving Keurig Dr Pepper's earnings kind of success over the past few months, whereby the coffee side of the business has hit a few more obstacles. You've had record green coffee inflation due to kind of poor weather in top producers like Brazil, like Vietnam. You've also had competition in the kind of coffee sector. It's a much more fragmented market. And then finally, you've got concerns about the impact of tariffs, particularly on Brazil, where most of the coffee imports come from. So this is really an indication of the differences within those two segments, those two parts of the beverage industry.
All right, fascinating deal, and the split, I think, well, I agree with you. It is the most interesting part of this, Charlotte, and we'll see those two companies trading separately. Bloomberg Charlotte Hughes Morgan talking to us about this big deal, $18 billion for JDE Peet's out of Amsterdam. Let's turn now to Washington, D.C. President Trump will meet with South Korean President Lee later today after securing a trade deal that resulted in a $350 billion fund for projects in the U.S. and a 15% tariff on imports from the key supplier of cars, smartphones, and machinery. Joining us now from Washington is Bloomberg DC's breaking news reporter, Kasia Klimasinska. Kasia, this is a deal that in some ways is interesting because it allows South Korean cars to be imported for lower prices than building them in the U.S. At least that's been Ford's complaint. But how serious is this? Is it written down on paper? Has there been an actual, 300-page agreement signed? Or is this still one of those sort of framework deals?
Good morning, Matt. Thank you for having me. Indeed, as you said, President Trump is meeting his South Korean counterpart today. They will have bilateral talks and lunch around noon. This event will probably be open to media as they usually are, and we will find out. So there is a trade deal, but like everything that involves Trump and tariffs, it's very much work in progress, so it will kind of depend on what kind of chemistry the two have today. I do think that the South Korean leader will look to have those talks focused more on defense and on North Korea. He wants President Trump to engage with North Korea Again, Trump had free meeting with North Korean leader during his first term that didn't yield much, but South Korea now wants to renew those talks.
There are, it seems, always now additional tariffs coming out of the White House. We're awaiting more this week. Who's going to get hit or which industries?
Again, so first of all, we are looking at India. India is facing a 50% tariff starting on Wednesday if additional trade talks don't yield additional results. That's because President Trump is seeking to penalize India for purchasing Russian oil. But obviously, India is not the only one buying energy from Russia. China and Turkey are doing that too. So Indian officials are seeking to continue talks, trying to change this outcome before Wednesday. So that's one, the tariffs on goods from India. The other one are the tariffs on small packages. So there is about 4 million parcels coming into the U.S. every day from all over the world. And the Trump administration has pointed those out, saying that there is a loophole that allows to avoid paying any tariffs on those. And this is about to change this Friday.
Kasia, one of the most interesting stories, I think, this morning out of Washington or over the weekend is that the president is threatening NBC and ABC, is threatening their licenses over news coverage. How serious is this?
It is serious. It's an escalating story, right? So it's nothing new that Trump is attacking media when he doesn't like the coverage. So he took to social media and he went after NBC and ABC, saying that they are giving him bad stories, bad coverage, even as his presidency in his eyes is very good. So he said that he would support revoking license. It's FCC that is handing out those licenses, and the head of FCC is currently a Republican who is supporting Trump's agenda. Every network has its license reviewed periodically, so there is a real risk.
All right, Kasia, thanks so much for joining us. Kasia Klimashinska there in Washington, D.C. with the latest coming up. We'll get you set up for your trading week. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Let's take a look at what's ahead this week. First up, Fed speak coming from Logan and Williams this afternoon as a follow-on to Jackson Hole. Then NVIDIA earnings are set for Wednesday after the bell. The world's biggest company, $4.3 trillion of market cap. It's definitely one you want to pay attention to. And we wrap up the week in economic data with PCE on Friday. That's the Fed's preferred inflation measure, and we'll see if that continues to climb. In terms of the movers that you'll want to watch this morning, Intel is higher after the U.S. takes nearly 10% stake. That's obviously a story we've been covering for a while. Verint Systems jumps as Thoma Bravo is said to near a $2 billion deal with the call center software maker. And Wayfair. Keep an eye on future furniture stocks, I should say, as President Trump calls for a major tariff investigation on furniture coming into the U.S. I'm Matt Miller. This is Bloomberg.